Good morning. Welcome to Stock Market Today. It's Wednesday, January 27th, 2021, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. So U.S. equities finished lower in Tuesday's trading with weakness picking up into the close of trading. Energy, utilities, materials, and financials underperformed. REITs, staples, and comm services led the broader tape. And it was another day where names with high short interest were substantial winners. Treasuries were unchanged. The dollar was weaker on the major crosses. Gold finished down 20 basis points. WTI crude settled down 30 basis points. As we get to the desk this morning, the late day selling from yesterday afternoon picks up again with S&P futures down about 60 basis points, trading near their worst levels. That's after Asian markets were mixed overnight. European markets are under pressure. Treasuries are actually weaker as well. A little bit of a surprise there with equities under pressure. The dollar is stronger against both the yen and the euro. Gold is down 70 basis points, and WTI crude is slightly higher. Going to be a big day on the news front today. First on earnings. We're going to hear from Apple, Tesla, Facebook, and Lam Research, to name a few of the big names reporting today. In addition, these micro factors are going to collide with the macro as there will be focus on the Fed, which wraps up their January policy meeting today, later this afternoon. Let's dive into the charts now. I think this is a case of your time frame matters. And you've heard me talk for the past few days, actually past about a week and a half or so, about the fact that the markets are overbought within the context of their uptrend. So what does that mean? I talk about it kind of within the scope of how to calibrate aggression levels on the long side. And I think that comes down to time frame. If you're a longer term investor, intermediate term investor, that's an uptrend, right? Those are three uptrends across the board. You can't really argue with it. In the near term, though, overbought conditions could lead to some sort of a pause or a pullback. So depending on you and your style, shorter term, you're probably not as aggressive here. Longer term, intermediate term traders and investors, you're probably looking for oversold conditions that hold support to become more aggressive again. Now, we don't know if support is going to hold, which is where the risk management process comes into play. I've been saying for a while that this is a great time to make sure your risk management process is in place, because if a near-term pause or pullback turns into something bigger, your risk management process will then take you out of the positions that are not doing well, will keep you in the positions that are, and then you'll be recalibrated to then again address your portfolio. For what are those levels? We've been talking about them. They're unchanged. Support for the SPY 360, 370, then 340 below that. For the Qs, 300 is important in the near term. That does remain the case. IWM 190 to 200, then in the 160 to 170 range. We had actually been talking about 216 on IWM in our notes to clients over the past few weeks. We tagged that level on Monday and have begun to pull back here a little bit. And IWM is largely under the most pressure here this morning. For the SPY above 340, we see 413. The trend is up until proven otherwise. But as we said, your time frame matters. It always does, right? And I think that that's one of the most interesting disconnects between people when they're discussing markets. Oftentimes it's a function of time frame, right? Somebody who's a longer term investor that's remaining bullish, who's having a conversation with somebody who's a shorter term trader, who's maybe looking at some stalling activity, and that shorter term trader could be bearish in the near term, right? Those two disagree, and both could be right. It really comes down to time frame. So I think that that's important and something to you have to know that for yourself. Who are you as a trader or as an investor? Let's hit our market in a minute. What are we writing about today? Well, stocks closed near the lows of the day as overbought conditions persist. I think we've kind of hit that pretty hard over the past week and a half. The Dow Industrials point to a cooling of the cyclical reflation trade. We chatted on this yesterday. Deeper dive in my note looking at sector rotation. Those cyclical names have become overowned, or those themes rather have become overowned, and they're taking a little bit of a breather. And as that plays out, technology is beginning to regain a leadership position. So rotation, always the lifeblood of bull markets, as Ralph Acambora likes to say, and potentially we're seeing that play out here. Sentiment is mixed with pockets of excess emerging. Those pockets of excess being the latest trend of going after the highly shorted names. I'm not going to deep dive into GME and AMC. You've seen it. It's not really how I look at markets. Futures point to a lower open today. It was higher when I was looking at the futures earlier for the Qs, but it's actually a lower open here today. Let's dig in now to what's happening from a power bar perspective. Power bars remain largely bullish. So again, your time frame matters here. Dow lost 8 basis points yesterday, 9-4 bulls to bears. S&P down 17 bips, 138-58 on the ratio there. NASDAQ slightly higher yesterday, 28-17 bulls to bears. Small caps lagged again, but still solidly bullish on the ratio front. Bonds down tick. Com Services, your best group. That's been a nice rebound play. You saw the chart yesterday on a relative basis, 7-0 bulls to bears after adding 1.36% yesterday. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Let's dive in to our stock of the day. And every now and then we see some interesting setups on the bearish side, or if it's a name that you own, maybe you want to consider why you own it. And today it's Splunk, SPLK. Now it was higher by over 1% yesterday. It does have a very bearish Chaikin power gauge rating. The trend is weak, but it is a member of software, which could serve as a tailwind. But for me, it's kind of like drilling down on the individual names. That's not a pattern that would excite me if I was long. It's certainly not a pattern that would get me excited for adding a new idea. Kind of a solid range of resistance at the 180 level that, should we rally, would begin to come into play. Now, we are overbought with bearish money flow for this lagging stock. Now, remember, software has been a hot space, but this has been a laggard since November. So obviously a name we want to avoid. If you still own it, you probably have to question why you own it. If you're looking for some potentially bearish opportunities, if you trade that way, this stock might be a name that fits that bill. So take a look at Splunk. Either way, if you're uninvolved, maybe you want to take a bearish trade, but if you don't trade bearish, probably not a good idea to change your style. Maybe just best to avoid it. But I'm calling it out. If you have names that kind of have a similar setup and you own them, maybe you question why you own them. So take a look at Splunk. Sector tracker now, movement of the major sectors over the last 5 days. Comms has rebounded again to the top of the list. REITs, a bit of a rebound there. Is a counter trend in nature, or is it the start of something bigger? We don't know, but we'll continue to watch. Tech will be in focus. As I said, we had Microsoft after the bell last night. Stock popped. It's fading a little bit, but still higher on the morning. Obviously, Apple is going to be a big deal, as is Lamb. Discretionary, you know what? We're going to hear from Tesla tonight, and Tesla is now part of the discretionary group. Staples have caught a bit, as have Utes of late. Healthcare rounds out the groups that are higher over the past 5 days. And there's your kind of your cyclical names, giving a little bit back, taking a pause here. Industrials, materials, financials, and energy fit the bill there. Our industry in focus, transport services, is actually part of the industrial sector. Now, it's been a monster. It's been outperforming the S&P by 15% over the past 6 months, has a solid power bar ratio at 6-2. It's ranked number 14 of 21 subsectors, and it's moved up one slot over the past week of trading. ArcBest, Hub Group, and Americo, ARCB, HUBG, and UHAL, respectively, all with very bullish Chaikin power gauge ratings, all holdings of a fund that has been in a steady uptrend, is working off an overbought condition. It's an outperformer, relative strength beginning to wane here a little bit in the near term. I think this is one you want to watch, kind of bigger picture, right? Especially for that cyclical trade, and for those of you who pay attention to Dow theory. Obviously, you want to pay attention to what the transports are doing. Maybe a little bit of stalling action here in the 70 to 75 area. I think ultimately, though, it would be a break of 70. That would kind of change the picture of the trend in the near term. So something to keep an eye on if you're watching the transports XTN. That 70 level starts to become important, especially as the long-term trend line inches its way up towards that level as well. Trending names now. Yesterday's movers and shakers are gainers and losers. LUMN is a bullish stock, up 28% yesterday, mentioned as potentially being in that group of short squeeze candidates. Fox A put some viewer numbers out there that the street liked. Stock higher by 8.85%. Viacom Nothing company specific there. The broadcast names have been strong for the past few days, up 8.8%. Kroger up 7.25%. Didn't see anything company specific on that front. Same goes for Nielsen, up nearly 7%. No company specific news. Now Freeport's been a monster and it's starting to roll over a bit. Right, again, that cyclical trade beginning to stall out a little bit. Freeport reported earnings down 6.8%. AES, nothing company specific to drive trading there, down 6% plus. ROK had earnings down 6.35%. Oxy didn't see any news there, caught up in the energy downdraft here a little bit, 5.25%. And MLM, Martin Marietta, bullish stock down 4.8%. Nothing company specific to drive the trading in that name. Again, it's we're in earnings season, so we're going to start to see a lot more of the micro colliding with the macro. Let's hit on sentiment like we always do on Wednesdays. Options traders more bullish. Look at that CBOE equity option put call ratio continuing to go to the downside. Now we know what the latest leg lower in this ratio is largely a function of people piling into the options of highly shorted names, trying to participate in the squeeze. You've seen it. Fizz, GameStop, AMC. If you're paying attention, you've seen it. I think that's what's driving this next leg lower here for this ratio. I don't really, it's just a function of the markets right now. We've been in an excess greed position for a while. Perhaps it's losing some of its signaling strength. I don't know. But it is what it is at this point. It's why you don't rely on just one data point to make your decisions. You take a weight of the evidence approach, you connect the dots. Now, at the same time, the VIX, as we've been saying, remains stubbornly above the 20 level, closing at 2302 yesterday and spiking a little bit here in the pre-market. So kind of an interesting dynamic at play, an interesting bifurcation with options traders all bulled up, but the VIX holding above 20. We've been talking about it for a while. It just is at this point. There's, again, connect the dots. And again, trend is the most important component. And by trend, we mean what is price doing? You can look at all these data points. You can, kind of drill it down. But it's simply going to be the weight of the evidence that takes hold. And the weight of the evidence has supported a bullish trend. So that's largely played out within the equity landscape, both in the U.S. and abroad. So we'll continue to watch. We continue to deliver our roadmap that we think makes the most sense. Now, industrials, again, speaking of that waning cyclical rotation reflation trade. This is just, the Dow, right? The 30 stock Dow Jones Industrial Average, still in an uptrend. But what's interesting to me here on this latest leg higher is that while it's held the moving averages and held bullish ranges on the RSI has not actually been able to become overbought. So a little bit of waning momentum here, potentially for the industrials in the near term. Still a healthy trend, just something we want to be mindful of. We've talked about the rotation in the market. These groups were favored. Take a look at the Dow, though, relative to the S&P, and now it's starting to take a leg lower once again. So we touched on it in depth in our note yesterday with the sector rotation work that we did. Those cyclical rotation names have had a great run. They've become crowded longs. And they're taking a bit of a breather here. And I think that's normal. It's healthy. But as always, we want to watch how it plays out, not remain dogmatic in any sort of view, and let the facts kind of bear out what positioning should be. And again, as that rotation is underway, you're starting to see a little bit of a reemergence of tech as leadership. Take a look at XLK here. Danced with the 50-day moving average, broke the downtrend line, has held it as support, and is now working higher once again. The RSI, and this is a relative basis, by the way, XLK relative to SPY, the RSI never became oversold during the consolidation and is trying to get back into bullish ranges, all while tech trades, XLK, trades at a new high on an absolute basis. So we've been discussing it. It's broad. You want to take a balanced approach and manage risk. So that's going to wrap us up for today. I talk a lot about what I'm discussing in my notes. You can check out those notes if you take the 14-day trial. Head over to chaikinanalytics.com/test drive to sign up for that. You get my notes 5 days a week. And on Sundays, Mark Chaikin's weekly note to get you set up with everything you need for the week ahead. So hope everybody is having a great week so far. We will be back tomorrow with updated thoughts. Be well, be safe. We'll talk to you tomorrow.